Hi, and welcome to another weekly recap. So, today I'm going to recap from May 26 to 30. And what we got in GU is we got one losing trade, and I missed a trade at May 30, and eventually that was actually a winning trade. So, let's see what happened on this week and why I got a losing trade, what was the psychology behind the trade, and how this was a winning trade and what was the target for me. I mean, a target for that winning trade. Okay, let's jump into the whiteboard as usual. Okay, let's start with May 26, the daily chart. We will be analyzing the of Monday's daily chart in depth. Afterwards, we'll be focusing only on the 4 hour and the H1 for the rest of the days because the daily chart in most cases remains in the same area of value throughout the week. So, coming to the daily chart, the price has mitigated into the weekly supply zone, and you know, there now there can be a chance of the price coming down to mitigate into this demand zone before pushing the price further up, or price can push further down to make a daily bearish eyeballs to mitigate into this weekly demand before pushing up. So, a lot of things can happen at this point of time. So we are simply expecting the price to push down, but since the price is strongly bullish, we can also play the bullish order flow until and unless we get a strong bearish shift in the lower time frames. So here we go. This is the 4 hour chart, and this is the demand that is currently holding the price. If I want to look for buys, then I need to wait for the price to mitigate into this demand and then look for chalk bullish in the H1, and then I can look to follow this price action till the price takes its high. Meanwhile, if I know that the price is going to come down, I can also look to play this sells if I get a strong sweep zone, bearish sweep zone. So that's the aim for Monday on this day. But unfortunately, price did not, form a kind of sweep zone. The price actually made a low resistance liquidity above, which can be targeted anytime. So it's kind of the low resistance liquidity. So I was not interested in looking for sells at this point of time. So I was waiting for more confirmation. So at the end of the day, it was actually a consolidative day. The price didn't expand much. So this is all about the expansion for today. So let's jump into tomorrow and see what happened. So as I said, the daily is in the same area of value. So let's directly jump into the 4 hour chart. In the 4 hour chart, we can still say that the price is can come down to mitigate into this 4 hour demand, but we'll be looking into the H1 for further confirmations. So H1 we have now clearly have a boss bearish with a protected high, which I can trust this because it has swept some liquidity and then pushed down. So and also price mitigated this area of supply. Suppose if the price comes down and takes down this low, then I know that the supply is holding the price. Then I can mark this strong rejection as the supply and look for sells from right here. And that's what happened. You know, price pushed down. So at 949, price pushed down. So I mark this as my supply, and this is an H1 supply. So the 4 hour supply is further below. So this is the H1 supply. Below the H1 supply, we are having the actual demand zone. So this is actually a liquidity area. Cool. Now there is a supply zone formed, and there is a strong bearish. There is a strong rejection, and there is a strong bearish push. So obviously, sells looks perfectly valid for me. And here we go. This was my lead. This was my lead, and I didn't take the trade here. So this probably, yeah, I took the trade right here. Yeah, here you go. I took the trade right here. Stop loss above, and I got tagged in and tagged out. So what happened? So this was my lead. Price mitigated into the supply. So price actually tagged me in and tagged out. Probably price wants to go much further, and yes, price did go much further high before pushing down. So this was the actual trade. Price went up, but this happened post New York session, post New York lull. Sorry, during New York lull period. Even if I played this trade, it would have been a losing trade. It would have been a losing trade. Why? As you can see here, price took out this lid, and this is the first LC candle, and this, yeah, this would have been the LC candle. So if I had kept 1 pip displacement buffer and 1 pip stop loss buffer, even then price would have tagged me and tagged out and then pushed down. So th- my entry model did not work on this point of time. So not here, not here, and not here. So in both the cases, I know the entry model did not work. So it's fine. The thing here is we can't control the market. All we need to do is we must stick to the rules. Sometimes rules may give us fruit. Sometimes it may not give us the fruit. So it is up to, it's a random distribution of profits and losses. So here we go. The next day daily remains in the same area of value. So let's keep that one. Whereas in the 4 hour chart, we can see that the price as internally was bearish, and this is a straight push down. So this can act as an inducement for the supply. So I can expect the price to push up to mitigate into this area of supply before pushing down. So looking for buys is valid if I get a strong bullish, chalk bullish up. And did I get that? No. Price went up. There was no chalk bullish. Price just went up a V-shaped curve. Again, it came down during the New York period. So it was a nothing day. Though there was some movement in the price, but um, I could have taken trade from here. If I had taken the trade from here, it would have been a valid setup. But for me, this was the valid demand zone. So looking to trade from here, it's not my idea. So I didn't take any trades on this day. So May 29, I think this is the trade. Yeah. Coming to May 29. So again, price is the daily is in the same area of value. There is nothing to say about daily, but price is pushing down. Price can liquidate this sell side liquidity, mitigate into this area of demand, and then push further up. All we know is price can push further down. So this is a valid demand which the price can mitigate if the price pushes up, if the price invalidates its supply. Otherwise, price can respect this supply and keep pushing down to mitigate it to this a daily demand zone. So the thing here is this demand does not look much valid for me. So all I wanted is look for further confirmation before looking for sells. And one more thing that was in my mind is this is the H1 swing structure, and the internal all reach the discount prices. Anytime the internal might shift bullish, and then the bullish structure may start. So that was in my mind, and that actually happened. So price one, because why I thought was is the buy sell liquidity is still not yet taken. So anytime price might shift bullish to take out the buy sell liquidity, and that actually happened, and price I was bullish, and now this becomes an inducement for the POI below, and price might push down and then continue the internal structure up. So that's a trade for a different day, but for now it's the end of the day because it's 14:15. This is the last candle that is getting printed. So coming to May 30th, Yeah, that was absent day. So last time we saw that this is the good POI that the price can mitigate and then push up. So we can look for sales, uh, expecting the price to mitigate this demand zone, because we are also having an inducement. If the price not mitigating this demand, at least the price will come down to take out the sell side liquidity. So this was the POI, price swept the buy side liquidity and chalk bearish. So this could have been a valid POI. At 13 hours, the candle mitigated the supply. So it would have been, fake break, inducement, clean entry. So even with one pip displacement buffer and one pip stop loss buffer, I was able to get 3.5 hours. So it's definitely a winner before the price mitigated the demand below. So it was definitely a winner, but I was absent on this day uh, due to personal reasons, so I was not able to take this trade. So overall, we got one missed trade and which was a winner, and I took one trade which was actually a losing trade. So this was actually my story. Whichever trades that I take, it ends up as a losing trade, and whichever day that I don't come to my desk, and that day becomes a profitable day. So that's why you should for trading. There is no either you get absence for 3 months and then come fresh. Otherwise, stay in the desk for continuous 3 months because you don't know when the profits are coming. Yeah, that's it for GU on this week. So let's jump into XAU and see what happened on XAU on this week. So we still got 12 more minutes, 13 more minutes. So I'll be changing GU to XAU. Yeah. So in XAU, we didn't get any trades on XAU. It's blunt week, so he was absent on Friday. But unfortunately, I didn't get any trades on this day as well. So let's jump into the charts and see what happened on XAU on this week. So here we go again. For May 26, let's start with the daily chart and uh, in depth. While coming to other days, I'll be skipping the daily and I'll be partially analyzing the 4 hour chart, but I'll be going in depth in the uh, 1 hour chart as well as this session updates. Cool. From the daily chart, here the daily is boss bullish and the internal structure is still bearish. So what I can say is this is a good area of value where the price can give a bearish reaction, and there is a reason for giving the bearish reaction because there is an sell side liquidity and this demand is currently holding the price. So if the price wants to continue this internal structure, price can mitigate this demand zone and push the price up. Or if the price wants to continue the bearish internal structure, then also price needs to come down. So overall, we are having a clear bearish structure in the daily chart. And this will be my primary target, the sell side liquidity. Cool. So moving on to the 4 hour chart, we are having a supply from which the price can react from and push the prices down. So this information is much more enough. And one more thing, the swing structure is bearish in the 4 hour chart and it has swept some liquidity right here, and it is in the premium. And it is about to mitigate the extreme supply. So once we get the mitigation, then we can look for H1 to chalk bearish, and then we can look for sells targeting this daily demand zone. So this one is H1. In the H1, we already have a chalk bearish. Price liquidated the buy side liquidity, and we have a chalk bearish. Now, all I want is uh, price mitigated this opening gap and then started to push down. So this demand is currently holding the price. If the price flips this demand, then no, I can look to target this demand if the provided the price mitigates into any of the valid area of value above. Moving on, we have a session update at 11:17 where the price made another bearish leg down, but this demand is still in control. But we can expect this demand to fail because we are having a failed reaction right here. So if we get, so this becomes an inducement. If we get a strong bullish reaction here onto this supply, I can look for sales targeting this demand below. And yes, we did get that one, but unfortunately it was EOD, and yeah, there was a low resistance liquidity being built up, but I was not able to capitalize on this move because price uh, did not mitigate the supply within the stipulated time within the session. So that would be an apt word. So moving on to May 27. So the daily is in the same area of value. We still did not get that sell side liquidity. So that target still remains intact. So coming to the 4-hour chart, 4-hour has mitigated into this area of demand zone. So this demand was currently holding the price. So if this low has to be uh, if this is a protected low, then I must see some strong bullish shift for longs. Suppose if the price invalidates this demand zone, then I can look for to target this daily demand zone below. So, no trades today. Uh, Coming to the session, I was looking to place sells targeting the daily demand below, expecting the price to make a bearish swing pause. There was a flip zone. There was a flip zone formed during the Asia. Yeah, this was the flip. Actually, this was the demand that was holding the price, right? So this demand zone got flipped. So obviously we'll be expecting the price to mitigate this supply and then push down, but that's what didn't happen. So price pushed down straight, so it did not give me any entry, so there was no trade simply. So probably since this is the internal structure, if we have some internal range sweep of liquidity and then chalk bearish, then I can look to target this internal low and this swing low. Though it's a strong protected swing low, there is a daily demand below which is a magnet to the price, so which H1 will boss bearish just in order to mitigate the daily demand zone. So that's end of the session. So May 29 28. Still, daily is in the same area of value. We still didn't mitigate the sell side liquidity below, nor mitigated into this daily demand zone. So this is the sell side liquidity that I can target, and this is the valid supply from which the price can make a bearish reaction. So here we go. As I discussed yesterday, price took out some internal range liquidity on chalk bearish. So this seemed a valid supply for me. So I looked for sells, but price mitigated this supply during the Asian lull period. So all I can do is I can wait for M15 to boss bearish, and that would be a confirmation entry. You can look for wait for the price to mitigate the 61.8 level and then take an MC entry from here. So that would make a valid entry. But price actually flipped this supply and came down, so mitigated this supply and then flipped this demand and then pushed down. So why I didn't take any trades from here? because I don't want to take any trades because this supply was formed long back. I am not sure whether this supply will hold or this will fail. So all I wanted is to wait for and H1 to chalk bearish. H1 did chalk bearish was right here. It was there a flip zone was formed. So I planned to execute a trade from this flip zone, but unfortunately that we came to the end of the session before I could execute that trade. So it's not late. So May 29 we still got that uh, flip zone to trade from, but unfortunately daily has taken out the sell side liquidity and we mitigated into the daily demand zone. So now things get a bit tricky whether this flip will hold or you know price can uh, since price is coming off from the daily demand zone, it can just flip all the supplies above and then it can take this high very easily. So from the H1 perspective, uh, so two things that we can look for buys. The first one is price is coming off from the daily demand zone, and second one is this is the supply that is holding the price. So we can expect the price to mitigate this supply. So if the price wants to, so two things can happen at this point: either flip it or respect it and make a deeper mitigation into the daily demand. But all we know is price will push up now, so there is only clear directional bias of taking longs till the price mitigates its supply. And price actually swept some liquidity and chalk bullish. And this was the POI, very valid POI to look for buys. So was there a valid entry? There was a lead, there was a fake break, but there was a pullback inducement. But unfortunately, uh, price did not take out that PBID or lead. So I even waited for the confirmation entry. It did not mitigate that 61.8 level. So that's why there was no entry models. There was no entry in GU, XAU. And eventually, price mitigated the daily demand zone, and as expected, price mitigated into the supply, which I expected the price to mitigate. So there was no trades. There was a trade, but there was no entry models. So on May 30th, price swept this buy side liquidity and chalk bearish. So all I can this is not as clear as GU, because in GU the price was not coming off from the daily demand zone, but here there is a dilemma whether this reaction is completed or is it just a small pullback and then the price will continue further up. But sticking on to the H1 swing structure, what H1 swing structure is telling us, price has pushed down and and the internal has chalked bearish and the internal has chalked bearish. So this low now becomes weak, so price can target this low. So I'm just following the um, H1 swing structure, expecting a deeper mitigation into the daily demand zone. Here we go. This was price after sweeping the buy side liquidity, chalk bearish, and this was a valid supply as price swept some buy side liquidity again, chalk bearish, and it also got some inducement. Price mitigated that supply and pushed down, which means that the supply chain is holding. So the next supply would be this one, as it liquidated the buy side liquidity and pushed down. So all I can do is wait for the price to mitigate the supply and look for sales. That's it. But price did not mitigate the supply, so it almost touched it. But even if I look for entry models, there is no entry model. So from here the pullback started, pushed up, and there is no confirmation entry also. There is no LC2X models also. So there is nothing from XAU on this day, but in GU we got a trade, right? So it is what it is. So yeah, overall, it was the price action was good. I took one losing trade, which at the end of the day, price ended up moving in my direction, but the entry model failed. But I executed the trade correctly. But on Friday, I was absent. The trade was there, the entry model was there, and the game plan would have been succeeded if I was present on the desk. It is what it is. Overall, I took one losing trade on this week. So that's it. That's the only update that I have for this week. So see you tomorrow. See you on the next week for further updates. Until then, cheers, guys. Bye.
Free audio post-production by alphonic.com.